And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Welcome to the Lifestyles Unlimited Real Estate Investor Radio Show. My name is Al Gordon, and as always, we're working on your financial freedom. And we're going to do so today by asking a very relevant question. Is real estate a good investment right now? What do you think? Is it or is it not? Now, I guess it depends on your perspective. If you're invested in the stock market right now, you've noticed the stock market has been doing pretty darn good. It really has. I'll give you a high five. Stock market's healthy. It's going upward and to the right. As a matter of fact, one of the things I noticed that could have an impact on its health, something you may just need to be aware of, is that two of the three major indices that when I do look, I look at three indices. I look at the Dow Jones, I look at the S&P 500, and then I look at the NASDAQ. And, well, here, I'll just look at them right now with you, and I'll tell you what I see. The S&P 500 traded at all-time highs not too long ago. Yeah, not too long ago. As a matter of fact, it hit an all-time high, and then it went down in pricing on heavier volume than the previous week. And then the following week, the market went down a little bit, but it ended the week higher. And what we're seeing so far this week is that the price is up from last week, but it tends to be falling. It doesn't seem to be doing very good. Now, the other thing that I'm noticing is that when the stock market hit its all-time high a couple weeks ago, and now we're just talking about the S&P 500 here, when it hit its all-time high back in the first part of June, it did so on higher volume. But in that same week of hitting its all-time high, it also closed low for the week. In the following week, the price went up a little bit. After it declined, it went back up a little bit, but it did so on lower volume. And we're kind of seeing the same thing this week. Now, why does that matter? After all, this is a real estate investing, education and mentoring type of show, right? That's what we're supposed to do here. Why am I talking about the stock market? I'm talking about the stock market because I've got experience investing in the stock market. I have lived through times where the stock market has done what the stock market's going to do. And sometimes that didn't benefit me. It didn't. It benefited all those people that bet that the market's going to go down. Now, I'm not telling you that the market's going to go down. That's not what I'm saying. What I'm saying is I'm seeing indications that maybe we're going to see a leveling out of pricing in the stock market or potentially a decline. And the reason I'm saying that is when the stock market hits an all-time high and then reverses course in that week and closes at the lowest price of that week, and it does so on higher volume than the previous week, that could be a problem. That is a warning sign that the stock market is sending to you. So what's going on in the Dow Jones Industrial Average? Well, the Dow Jones seems to be doing a little better. Back in early June, when the S&P 500 was sitting its all-time high and closing the week at the lowest point of the week, guess what the Dow Jones Industrial Average was doing? Same thing. And it was doing it on higher volume than the previous week, which was an all-time high at that time. Now, what we're seeing since that time is we're seeing that the market closed higher last week, and this week it's doing better. But we're seeing the same thing with volume. Volume appears to be declining, and that can be a problem. If you know how to read stock charts, and I do, I've trained myself on how to do it, that is a signal that there may be some problematic activity coming up in the stock market. Now, there's a thing called the NASDAQ. You've heard of it? NASDAQ doing the same thing. Same thing, with the exception of last week. Last week, it closed a little bit higher than the previous week, which again, it closed at the lowest point of the week during that week. I don't even know if I said that correctly. I probably just confused you. So what I'm getting at is the NASDAQ closed on Friday at the lowest point it had obtained during the entire week. And during that week, it had hit an all-time high. But it closed on declining pricing. And volume was up over the previous week, which had been an all-time high. So we're seeing the same pattern across the indices. The difference with the NASDAQ is that last week, the price went up a little bit. It had declined, but it went back up and closed higher for the week than the previous week, but not too much higher. And it did so on increased volume, which normally would be a good thing. This week, what we're seeing is we're seeing that the price is a little bit higher, but I'm kind of curious as to what volume is going to do. So what I'm telling you is that the stock market's going to do what the stock market's going to do. You can't do a darn thing to change it. If the stock market's going into a pattern where it's going to try to trade sideways for a while, guess what it's going to do? It's going to trade sideways. What if it goes down in pricing? It's going to do that too. And you're just going to ride it because that's what you do. So that takes me back to my original question. Is real estate a good investment right now? Well, I think it is. And when we come back in the next segment, I'll tell you exactly why. Stick around. Welcome back to the show. So, all this stock investing stuff, what do you think? Am I right? Am I wrong? Do I know what I'm talking about? Do I not know what I'm talking about? Well, I guess it depends, right? Depends on what you know and what you think I know. I know what I know. And I know the stock market is potentially signaling signs that it might be cooling down. I mean, we've had a really nice run up in the stock market, have we not? I think we have. You haven't seen returns come in like this in quite a while. But the stock market doesn't always just keep going up and up and up and up and up. It cycles. And depending on where you're at with what you're trying to do for your future, that may bother you or may not. Now, if you're a little older, what do I mean by a little older? Let's say you're in your 40s or your 50s, and you've been putting money aside in a retirement account. You're probably pretty happy with what those retirement accounts are doing right now. But what's the number one thing that they teach you about the stock market? Buy low, sell high. Let me say it again. Buy low, sell high, right? That's the strategy. That's the time-tested formula for making money in the stock market. So if the stock market is at highs right now, and you've identified it's probably at a high, and it potentially could be going down, What are you going to do? Well, sadly, most of you are just going to write it down. You're going to ignore that sage advice of buy low, sell high, and you're going to do dollar cost averaging, right? But think about it. What if you could take all that money and keep it for yourself? What if you were to call up your financial planner or whoever manages your stock account or your mutual fund account, whatever you've got, and you say, sell everything right now? First of all, can you do that? Can you go to all cash in your retirement account? That's a question for your financial advisor. I don't know how your account is set up. Seems to me that you could go to all cash. That you could sell high, stay in cash, wait for the market to correct, go down, get to a low, and buy everything back then. But we have a problem. It's called market timing. It's very, very hard to do. Just because I think I've identified a top across the three major indices doesn't mean that I'm correct. Because the market's going to do what the market's going to do. We could get to next week and all bets might be off. This thing with Iran may be in the rearview mirror. Gas prices get back to normal. Inflation starts cooling off. And the stock market takes off again. Could happen, right? So you're fearful of selling high because it could go higher, right? And you don't want to miss out on those gains. So just as hard as it is to identify the top of the market, it's just as hard to find the bottom of the market. It's difficult. And with the way you're investing now, you don't even know what you own. You have no idea what's in your stock account. You don't know what fractional shares you own of what companies at any given time because you do not review that. You don't. You're too busy with everything else in your life. You're working hard for somebody else. You're trying to spend time with your spouse, trying to spend time with your family, trying to live some form of a lifestyle on the days off where you're not, cleaning around the house and trying to get caught up. And it's a grind. I know it's a grind because I did that grind. I did that grind for a long time. And I don't grind anymore. And the reason I don't grind anymore is because I realize that real estate is a good investment. But is it a good investment right now? I asked you that question earlier in the program. What do you think? Well, here's what I think. I think real estate is a solid investment right now. And this show is coming from you or coming to you in mid-June 2026. There, I just put a date stamp on this thing. But let me warn you something about real estate. We're not in a slam dunk buy anything market like we were in 2006 and 2007. Success in this current market depends on location, property type, strategy, financing, and your time horizon. These are all things that you have to take into consideration. Now, here's Here's what I think has happened. The market has shifted from a red-hot post-pandemic boom to a more balanced, buyer-friendly environment with higher inventory, moderating prices in some areas, and steady but not explosive demand. It's generally seen as a stabilization or early recovery phase after higher interest rates have cooled things off a little bit. So what do you think is going to happen in the housing market? What do you think is going to happen in the real estate markets? Well, here's some things that I know that are currently happening. In many markets, inventory is rising. There's more properties being put on the market, which gives you as a buyer negotiating power. This is not the time to be selling your assets. That time was a while back. We at Lifestyles Unlimited told all of our members, when we saw that it was a red hot market, we said, sell everything that you can, that you don't want to retain for another, say, 3 to 5 years. So that's what we did. We liquidated a lot of our inventory, sold it to people that are willing to pay top of the market pricing for it. Not a problem. And now we're in a market where our money can go a little bit farther. So we sold high and we're buying low now. What do you think about that? In the next segment, I'm going to give you a more robust snapshot of the current market. Stick around. Welcome back to the Lifestyles Unlimited Real Estate Investor Radio Show and podcast. My name is Al Gordon, but you knew that already. And I'm working on your financial freedom, which you're happy to let me assist with. And I appreciate that because that's why I'm here. I'm here to share with you information nobody else is sharing with you. And I'm sharing it with you from the perspective of somebody who learned how to correctly invest in real estate after many years of doing it wrong. And by doing it correctly, by doing it the Lifestyles Unlimited way, I completely changed my retirement destiny. I did. So what I'm living now is a result of what I put into action several years ago. And it's great. I'm happy. I'm relaxed. As my buddy John, who I had on the show not too long ago, says, I don't wake up to alarm clocks. Check. I don't sit in rush hour traffic. Check. And I'm happy. Check. I'm all those things. And you can be that way too. It's going to take a little effort on your part. What we do at Lifestyles Unlimited is not a get-rich-quick scheme. It takes some time to educate yourself and then to start buying investments the correct way and then start living off the proceeds of those investments as they mature. Pretty cool. Now, you don't do it within a retirement account. That means the government is not telling you what you can and cannot do with the money. You do exactly what you want to do with the money. You know, here's the beautiful thing. The rule book for real estate investing is different than the rule book for stock investing. The laws that are available from a taxation standpoint to benefit a real estate investor don't exist in the stock market world. The ways we make money in real estate outnumber the ways you make money in the stock market. You didn't know that, right? It's true. All right, let me get back into my current market snapshot. Inventory, I talked about it, but I'll say it again. Inventory is going up across the nation. More properties are coming on the market, which gives you, better negotiating and buying power. Home prices, what are they doing? According to Zillow, they're relatively flat with maybe some modest growth. So Zillow forecasts a 1.2% natural appreciation rate across the nation for 2026. Now, some areas year over year are signaling declines in listing prices. On average, about 2.4%. In other words, a property that was potentially for sale a year ago is now on the market for a price that's about 2.4% less than what was being asked for it last year. It's just the way it is. So aren't you? I know what you're thinking. You're thinking, dude, you're losing money in real estate. Prices are going down. No, we're not. We're not, because we're not transacting the property. We locked in our pricing when we acquired our product. And then we're just going to own and operate that property until it's time to liquidate it. Simple as that. Existing home sales are near multi-year lows, but showing some slight improvement. That's according to LinkedIn. Now, what does that mean? Well, let's read it again. Existing home sales are near multi-year lows, but showing slight improvements. A more balanced market is expected. Sounds like to me that maybe we're hitting a bottom in the real estate market. Maybe the cooling off prices have cooled off and conditions are getting better. That means if we're in a buyer's market right now, this is the time to buy, because the future can be very beneficial to us. Mortgage rates. Boy, there's the elephant in the room, right? Mortgage rates. Yeah, everybody's talking about them. So they're up there, right? 6s, maybe to the 7s for an investor for a 30-year fixed, 7%. Forecasts suggest that they might ease modestly, but are going to stay elevated compared to pandemic lows. In other words, no likely return to a sub 5% mortgage for you as an investor in the near term. And that's according to LendingTree. But that's okay, because we can price in the cost of the mortgage to the overall cost of owning and operating the property. It's part of how we analyze a deal. And the numbers just don't work. We just walk away. We don't buy the deal. We don't need the mortgage because we didn't buy the deal. Does that make sense? What about affordability? Where are we at with affordability? Well, it's slowly improving, with more inventory and incomes outpacing price growth in spots, but still challenged by rates and high prices in many markets. First-time buyers, however, are very active. Now, why do I point that out, first-time buyers? Because when we're getting ready to liquidate our properties are actually excellent buy opportunities for a first-time home buyer. Because what we've done is we've taken a property that's in really bad condition in many cases. Sometimes in just a little bad condition, but usually it's moderate to the to put it lightly. But we know how to fix all that stuff. We know how to estimate it. We know how to figure out if it's going to work. We know how to make it work. And then we renovate the property and put the asset back into service. And then we offer it as a rental for however many years we decide to hold it. Maybe that's 1 year. Maybe that's 3 years, maybe that's 5 years. I know Lifestyles Unlimited members that have single family assets in their portfolios that they've held for more than 10 years. So it's just a business decision on what you're going to do. But here's what I know. When we go to liquidate these properties, we're actually at a price point that first-time home buyers are also in. And our properties make great properties for somebody who wants to be a first-time home buyer. Because what we've done is we've fixed the thing up. We've used it as a rental for a while, but the things that we fixed up probably haven't broken. And if they have, we fixed them again. And at the end of the day, what we're selling is we're selling a nice property that's a little lived in, which is exactly what first-time home buyers are looking for, right? They're looking for a property that they can call their own, that they can put their own little improvements on. It's a nice symbiotic relationship. And it's one of those relationships that we love as Lifestyles Unlimited members. Now, I'm talking about the single-family space, and I've been talking about the single-family space. In the next segment, I'm going to talk to you about the pros of investing in real estate now. Stick around. Welcome back to the show. So as promised, I'm going to talk to you about some of the pros for investing in real estate right now. And I think one of the biggest pros that's out there is the fact that we're starting to see buyer's windows in different parts of the country. What does that mean, a buyer's window? It means an opportunity for you to buy low and take advantage of what the market has to offer you. See, what we're seeing is we're seeing higher inventory, and we're starting to see some more motivated sellers come into the space, which are creating much better deals than what we saw, say, from 2021 to 2023 when we were in a hot seller's market. That's when I was selling off all of my assets. We're also seeing that rents are starting to stabilize, and there is potential for them to rise in different markets as new supply starts to ease. Now, what's that new supply? That's new construction. Yeah, you're going to compete with new product out there. And there's been a lot of new product coming into the marketplace in many different markets. But that new supply is starting to ease up, depending on the market. We're also starting to see long-term fundamentals. Did you know there's a housing shortage out there? There is. Where I live in Tennessee, there's definitely a housing shortage. There's more people looking for housing than there's available housing to rent. And it's not just here where I'm at in Tennessee. It is in many parts across the nation. Now, real estate is actually kind of a hedge against inflation. I'm not going to go into the details of that, but I want you to understand that. Go ahead and do your own research on that. I mean, put that into an AI generator. Ask it, why is real estate a hedge against inflation? And have AI spit the results out. That's your homework for today. There's no test tomorrow. No, we don't test our students. You got to want to learn this stuff. And when you become a Lifestyles Unlimited member, you will want to learn this stuff. So I'm just trying to get you ahead of the curve now, get you learning stuff, because you're probably going to wind up being a Lifestyles Unlimited member, because Lifestyles Unlimited just makes all of this stuff that I'm talking about easy. There's no other way to say it. They make it easy. Some of the other things that real estate's going to offer you is cash flow, something that you're not getting right now in your current investment strategy. You're going to get tax benefits. You get to take depreciation on your assets. You have the ability to do a 1031 exchange. These are tax benefits that are written into United States tax law. Nobody's changing any of this stuff overnight. This stuff's been around for a very long time, and you can take advantage of it too. Real estate offers you the ability to leverage the asset. So in other words, you bring in other people's money in the form of debt, and you use that debt in lieu of your own cash, which keeps your cash reserves where they need to be. You're not spending all your money on one particular asset. That allows you to buy multiple assets over time because you're not spending all your money on one. If you have enough money for one, you have enough money for five. I'm just telling you how it works. Real estate's going to offer you appreciation over time. Now, I mentioned earlier in the show that it's currently looking like appreciation might be going around 1.2% nationwide right now. But at other times, it's been way higher than that. That 2001 to 2000, did I say 2001? I meant 2021. Yeah, let me get this right. That 2021 to 2023 time period, real estate was just going gangbusters. Pricing was through the roof. And we're recovering from those pricing increases. And that's okay. It's a natural correction in the marketplace and allows us to acquire more stuff now at a better price point than potentially what we could have acquired it for, say, 4 or 5 years ago. I think there's some easier entry for investors. What do I mean by that? Easier entry. Well, I think when less people are competing with you and there are more properties to review, to identify, to analyze, and there's less people willing to buy those, I think that's good for you. I think that's really good for you. I think 2026 is potentially easier for smaller investors like you and I because more deals are coming available. Now, I'm primarily focused in the multifamily market. And I've been looking to buy a multifamily asset. And I analyze multiple deals every week. I write an occasional letter of intent. And what I have found is that sellers want the price to be here, but the financials put the price here. And what sellers want me to do is to come up with my price and effectively pay them for any work that I would do myself, which I'm not willing to do. So there's a little bit of an imbalance going on in the multifamily space. And I could do an entire show as to why I think that is happening. It's part of the reason I'm not really talking about multifamily in this episode. I'm really just focusing on the single family space. But I think you need to know that we're seeing the same things in the single family market as we are in the multifamily market. And that's important for you to know. Now, what about the cons and risks of investing in real estate right now? I mean, there's got to be some cons to it, right? I mean, I'm sure there are. Some of you are probably thinking, well, the interest rates are really high. But here's the point. If the deal doesn't pencil with what you can borrow at today, the deal just doesn't pencil. And you move on to the next one. It's just simply that. Some of you thinking about economic uncertainty. What if inflation doesn't get under control? What if we get into a potential recession? What if geopolitics erupt? What if policies change? In other words, things like tariffs. What if they become a problem again? Could those things impact demand and value? Yes, they could. I'll be honest with you. Not that I've been lying to you this entire show, because I've not been. But what I'm trying to say is I just want to get real with you. I could cover everything that I think is a con or a risk. But here's the thing. Most of the cons, most of the risks that you would identify, I've already mitigated because I'm a Lifestyles Unlimited member. Because I'm educated on how to do this correctly. I started my education in 2017. And I haven't looked back. 2019, I was able to retire myself, this time permanently. And ever since then, I've been dedicating my life to assisting people like you with understanding what I finally figured out. And I'm not the smartest guy in the world. I will flat out tell you that. I am not the smartest guy in the room. So if I can figure out how to do this stuff with the assistance of Lifestyles Unlimited, imagine what you can do. So this Lifestyles Unlimited thing, what is this? What is this thing that I keep referencing? Lifestyles Unlimited. It's a real estate investor education and mentoring company. It's been around for over 35 years, doing exactly that. Educating and mentoring its members on how to invest correctly in real estate. We talk about concepts like this all the time. Is now a good time to invest in real estate? And I'm here to tell you, I'm pretty confident that yes, it is. Real estate remains a good long-term wealth building tool in 2026 for disciplined investors who buy right in the right places, especially as the market normalizes. Do you want to take advantage of that? Do you want to be a part of that? Do you want to be a part of the next potential wave of real estate millionaires and multimillionaires? Well, now's your opportunity. Now's your opportunity to start the educational and mentoring process, because you have to start that process before you buy any assets. Because if you just go, okay, I'm a real estate investor, I listen to Al's show, and you go out and buy assets, you might have a problem. And I don't want you to have problems. I want you to learn how to do this the correct way. And the best way that I can advise you to do that is to go to lifestylesunlimited.com. When you get there, click on Start Here. And let's get you going.
Thank you for listening to Lifestyles Unlimited's Real Estate Investor Radio Show. Ready for more of the map? Visit lifestylesunlimited.com. Explore our videos and articles. Click on the radio tab to access past show podcasts. View the radio show schedule and listen to our best of radio shows. Want to continue the conversation? Follow Lifestyles Unlimited on Facebook today. We want to meet you as well. Sign up for a free workshop at lifestylesunlimited.com. Until next time, remember, it's not the money, it's the lifestyle.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers and do not necessarily reflect the opinions of this station, its affiliates, its management, or advertisers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Lifestyles Unlimited Real Estate Investor Radio Show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.